I'm going to try to keep this short as possible. What I wanted to do was I wanted to talk just a little bit about Chinese stocks. Chinese stocks. So last time you probably heard me talking about Chinese stocks was when I was taking up more position in NIO and KNDI, which are both two companies that make electric cars. One thing you need to understand is that the Chinese market is much, much larger than the American market. Furthermore, China basically has domination over Asia and Southeast Asia. The only exception being India, but China also has some level of domination in India as well. So when I say domination, what I'm saying is China sells them the largest majority of their products. If you go to any of the countries in the nearby area, South Korea, Philippines, Thailand, you can feel China's influence all throughout those countries. Now, they do not control those individual countries' internets as for their systems. Like, for instance, China blocks Google, most of the other countries don't. However, each of those individual countries in that area, whether it's Thailand, Cambodia, Vietnam, Laos, doesn't really matter. They all have their own restrictions when it comes to worldwide internet. I experienced that myself while I was in the Philippines, and you can easily see that China has definitely had influence on their internet regulation. They don't decide what the Filipinos can't watch. The Filipinos do them that they do that for themselves. But the reason why I wanted to talk about this was because Tencent Holdings recently suffered a 60 billion plus loss simply because the Chinese government claimed that they felt that video games were like drugs. So basically, the story, you can read about it yourself, because again, I'm going to keep this short. But basically, the PRC the government leaders, they basically said, yeah, we think video games are causing these kids to basically act like they're drug addicts. They're basically saying video games are opioids, and they're not really opioids, but even uh, psychologists, physiologists, they'll say that playing video games has a lot of the same effects on dopamine levels as drugs do. But the bottom line is, just saying that, just coming out and saying that, caused Tencent to lose $60 billion. So Tencent, if you take a look at the 1 month, this is Tencent for the month. Right now we are trading at $56. However, if you take a look way back, they are still higher than they were 5 years ago. Tencent, just like Baidu, you can take a look at most of the Chinese stocks. Baidu is a little bit down. Let's take a look right there. Let's see the 1 year. Let's see the 5 year. Baidu is definitely trading lower than it was back in 18. There are a lot of other ones, but the general consensus that I've noticed among the Chinese stocks that I hold is that Chinese stocks, for the most part, during the Trump presidency, once Trump started attacking China, there was less investment going towards China. Then there was also the situation with Jack Ma over at Alibaba, which was doing great up until they started having issues. In fact, let me add the symbol BABA right here. I think I have it on a different list, but let me add it right here. So Alibaba was trading as high as 319. Now, if you watch my channel regularly, you know I always tell the story. One of my best, I told my friend I'm going to tell this story at his funeral. Even if I have to give his eulogy, I'm going to tell the story. I told him to get into Baba and to get into Apple at about the same time. This was about 7, 8 years ago. And I told him, I was like, listen, buy into this. I think he paid about $80 for Alibaba. And it started going down. It went down into the 60s, and his mother hassled him. His mother told him, oh, we got to sell. It's going down. It went from 80 to 60, and now it's $179. But when I used to call him up all the time and tease him about it, it was $319. Ever since the COVID the epidemic started, Baba lost a lot of money. So these are the main Chinese stocks that I'm vested in. I got them a long time ago. And for the most part, I'm up in all of them. I did take a little loss in one of my portfolios on NIO and KNDI, but KNDI hasn't recovered. NIO did. So the thing about it is, I'm not worried about it because as time goes on, the Chinese government's going to mandate electric cars as like the only cars. And Europe is going to also force most gasoline cars off their roads. And China is poised to be selling electric cars all over Asia and Southeast Asia. So again, the way you have to understand my way of thinking, I'm not in stocks or real estate to get rich quick. I'm in for the long term. I'm in for the dividend holds. Some of these stocks, as you can see, pay dividends like Chinese life insurance and BYD, and Tencent is one of the other ones that pays dividends. In the short term, yeah, stocks in general have been suffering. As we move into the Delta virus phase of COVID-19, a lot of stocks are suffering in general. Like if you take a look across the board, a lot of stocks have gone into the red even though they were in the green. I'm not so worried about that because I know eventually the economy's coming back. However, there are fears of unemployment hurting the stock market. There are also fears of having issues as we restart the economy, which has caused tech in many cases to drag down the Dow Jones. The Dow Jones, as you've seen, has been a bumpy ride lately. Now, when people come on YouTube, they're not supposed to give you any financial advice, so I'm not going to give you financial advice. All I can do is show you what I do with my money. For the people who are maybe new here, because I've gained a lot of subscribers from some of my other videos, what I want you to understand is I'm a dividend stock investor. Some might call themselves Warren Buffett style investors, where you focus on real estate and you focus on buying dividend paying stocks. I am not a day trader. I do not jump in and jump out at the end of the day. I don't do that. I'm focused on long-term holds. So basically what I do is I take money and I invest it into certain stocks, specifically those that pay dividends, and other stocks that I feel can grow from where they are. And I just sit back and wait. So my dividend paying stock list is right here. These are all the dividend stocks that I currently hold. You'll probably notice that most of them are gas, oil companies, energy companies, and big tech such as Microsoft, Apple, Verizon, AT&T, because they're heavily investing into 5G network infrastructure. They're about to tear down the 3D network, the 3G network, I should say. A lot of 3G devices are going to stop working, so that's going to force a lot of people to upgrade to 4G and 5G. So, yeah, there's always money to be made in the tech sector because technology continues to change. One of my recent big gains has been in NVIDIA. I bought a lot of shares in NVIDIA right before and around the time when we had a crash in 2020. I bought some more shares before NVIDIA started their stock split. The stock has split. I'm up in NVIDIA. I've made some serious gains there. I was trying to get people to buy into AMD and Logitech, and that was back when they were down because of the Dow had dropped because of COVID, and now they're riding high. They're either $100 or above. They used to be what, $40, $50, and that was just 1 year ago. But that's just where we are. That's just where we are right now. And that's what my investment strategy is, because in 10 years I plan on retiring. I already own 2 houses. I plan on getting a third. But I don't know if I'm going to stay in this country. I may decide to go to some nice third world country with young, foreign, beautiful women. And I might just end up on a beach with a pina colada in one hand and some young chick in the other. And that's just how I intend on basically living as a retiree. That's just how I intend on doing it. But that's just where we are. Now, I should also point out, I clowned the Robinhood IPO release because it immediately started to drop. It dropped 8%, then 12%. And now it has bounced back by about $10 from the initial offering of $38. Now, I've seen this kind of behavior before. We saw it in Coinbase. Coinbase started really, really high. It smelled to high hell of a scam going on. And ultimately what we saw was coin rose very, very quickly to, the high, The high of coin, just looking at it right here to see where it is. I'm going to consult my second chart. Yes, the high was $429. The low is $208. Right now, because most people bought in somewhere in the $300 range, a lot of them have lost money, hoping to regain that money. Now, as you see, coin lost a lot of money during the initial IPO release days, the first day, the second day. And as you can see, it has started going back up. So it had dropped pretty low, and then it had started to make its way back. So I'm thinking a lot of that is happening with Robinhood. Because the problem that I see with some of these recent IPOs is that they release these things and they expect you to buy it just because it's an IPO. In the old days, you couldn't even get into an IPO unless you were requested or unless you were invited. It was like a members club. IPOs are initial public offerings. That's when a company decides to go private. The way it's supposed to work is companies are supposed to build their money using venture capitalism. And when they do offer the IPO, they're not really supposed to be using the IPO just to build funds. The IPO is usually to give them hype on the market. But what they've been doing recently, instead of taking businesses and trying to grow them, what they've really been doing recently is they've been putting these businesses public, and they've been trying to pay back the initial investors using the money that they're making in the IPO. Some of those people hit the sell button the moment the IPO starts, and they cash out, just like what would happen with Coinbase. But in Robinhood's case, no, there's no telling how high Robinhood's going to go. But one of the things you'll probably notice about Robinhood, none of these things right here that Reddit is invested in pay dividends. Now, a company that doesn't pay dividends usually is not profitable. Now, that is not true in the case of, say, Berkshire Hathaway or say Amazon or Google. But one of the ways that you know you're getting a decent company is if it's been around a while, it has a good name to it, and it's profitable. Robinhood is not profitable. The majority of people who use Robinhood and, by extension, Coinbase, they are speculating on cryptocurrency. Cryptocurrency is not profitable. Now, I know there's a lot of people who are going to be upset if I don't mention the fact that Bitcoin raised about $10,000 because it had dropped below the $30,000 range. It went up as high as like 42, I believe, and then it suddenly hit the sell, and Bitcoin is back at 38,000 where it belongs. And eventually it's going to fall down a little. And the problem that nobody seems to understand is that I'm not releasing FUD and fear, and I'm not releasing FUD. What I'm explaining is that the mere fact that there's almost 11,000 cryptocurrencies, with more cryptocurrencies being made every day, the reason that it's very simple. There's not enough money to go around. At the end of the day, absolute bullshit like Shiba Inu and Safe Moon and Dogecoin, what people don't seem to understand is that the media is what's hyping these things up. When the media hypes these things up, whatever that media may be, people rush their money into it and the price and value goes up. But what they don't seem to understand is if there's 11,000 cryptocurrencies, there's more than 10,800 cryptocurrencies. By now, there's probably over 11,000. What people don't understand is there's not enough money to go around. If there were only 10 cryptocurrencies, all of them would probably be sky high in value. Bitcoin very well might be $1 million right now. But guess what? There aren't only 10. Bitcoin is limited to less than 25 million Bitcoins. Most of the coins that came later, like Ethereum, Litecoin, even Shiba Inu, even SafeMoon, even Dogecoin, even Stellar Lumens, most of those coins were designed to fix problems that they had with the Bitcoin limitations. So rather than people trying to buy into Bitcoin and buying nothing more than Satoshi crumbs, what they're doing is they're giving people an opportunity to buy into the cheapest coins and get as much of these tokens as they can. So that, and I shouldn't mix the term coins and tokens. I'm going to use the word tokens. What you're buying is tokens. The difference between coins and tokens is we know how much a coin is worth. A token's whatever I tell you it's worth. A quarter will always be worth 25 cents. A nickel will always be worth 5 cents. A dime will always be worth 10 cents. What the fuck is a Bitcoin worth? It's worth whatever I tell you it's worth. That's why all of these cryptocurrencies are tokens. They are not coins. They are tokens. The only exception might be considered a stable coin where they peg the value and they make it so that it's worth exactly what the dollar is worth. But here's the thing. Why would you put your money in tethers when you could just put your money in dollars? Now, somebody might say inflation protection. Here's the thing. What you don't have protection from is scams, because there's a possibility that Tether is a scam, and if it crashes, it might take down the entire crypto network. So that's just where we are. Sorry, that's just where we are for the... But there are some people who are still betting money in XRP. There are still people who are betting money in Cardano. They were excited to see it go up. But the bottom line is there's so many of these damn things that that's just what it is. There's a lot of them. I do not put my cash money into these things. What I do is I mine coin and then I change the coins using Coinbase, because like basically, as you can see right here in this portfolio, I have $68 worth of whatever I have. If I want to exchange it for another coin, I can quickly, easily do that. So I can easily go from Dogecoin to Shiba. Well, I can't go to Shiba Inu because they don't have the trade button. But I can go from Dogecoin to Ethereum. I can go from Bitcoin to Ethereum. I can go from Bitcoin to Bitcoin Cash, so forth and so on. But I find it, I'm not putting my own cash money in this. What I do is I use a GPU computer system that I have. It's a rig in order to mine coins. The only downside is it's very, very power intensive. So what I do is I don't do it in my own house. I do it in my office where I don't have to pay for it. So that's how I get around it. But that's just where we are. So cryptocurrency, as you can see, the whole fucking thing is in the red. What does that tell you? The whole thing. Now, some people will just say, well, this is a bear market. Don't worry about it. I think this is a little bit more than a fucking bear market. They were promising me back in 2018 Bitcoin was going to be $1 million by now. Now, even if I wanted to listen to the people who had lower expectations and were saying $100,000, it still ain't getting nowhere near $100,000. $60,000 is still $40,000 off $100,000. And we're right now at half that. We're not even at the $64,000 range. And right now, Bitcoin is losing money. There's no way to tell where this will be in September after the Delta virus ravages these people and causes most people who have put money into the market to either be afraid and pull it out, or hinders people who normally would try to put money into the crypto market trying to get some money through the Ponzi scheme that this system is. So that's just what it is. So now that I'm done talking about that, I can go back to real stocks. What you really need to do, if you don't know what to do with your money, if you have steady income coming in, you don't know what to do with your money, you don't have to use my list. But what I'm going to say is the smartest thing you can do is invest yourself in dividend stocks. Big tech companies, companies you know, oil, gas, energy, they're going to be around for a very long time. Even if they manage to turn all the cars electric tomorrow, people are still using gas and oil to heat their houses and to do other things. Furthermore, the energy companies are diversified. They are slowly moving towards electric infrastructure improvements. So ultimately, because they're diversified, it's safe to go with them. It's safe to go into big tech. And if you look at the companies, if you look at their individual fundamentals, you'll see that most dividend companies right now are actually doing pretty well. Like, for instance, one of my favorites right here is Sunoco. And then there's AT&T, because these pay very high dividends. The simple fact of the matter is dividend-paying stock is better in many cases than putting your money into the savings accounts, because as you know, you're not going to get very much interest off of them. So basically, that's all I really wanted to say, just to address those couple of issues. And that's basically it for now. I don't know what my next content will be, but I'm pretty sure it's going to be fun.